Hey everyone, welcome back to Forex Market Insights, your go-to source for daily Forex analysis and market forecasts. I'm FX Videos, and today is March 19, 2025. We've got a lot to break down, from the US dollar's performance to major currency pairs, central bank activity, and key economic reports that will shape the markets as we head into the next trading session. So, grab your coffee, get comfortable, and let's dive in. Let's start with today's market action. The US dollar held steady against major currencies, but traders are keeping a close eye on Federal Reserve signals, especially after the latest CPI numbers showed inflation is still above target. The dollar index, DXY, hovered around 104.75, reflecting mixed sentiment. While some investors are betting on rate cuts later this year, recent Fed comments suggest they're in no rush to ease policy. Looking at the majors, the euro to US dollar pair struggled to break 1.0900, as the European Central Bank remains in a tough spot, juggling sluggish growth and persistent inflation. Meanwhile, pound sterling to US dollar saw some upside movement, touching 1.2770 before retracing slightly, fueled by better-than-expected UK jobs data. On the yen front, US dollar to Japanese yen surged past 149.50, testing resistance near the 150.00 level. With the Bank of Japan signaling potential policy shifts, traders are watching for any hints of intervention. Now, let's talk about what's ahead. The next workday is crucial, as we have several high-impact events on the calendar. Federal Reserve policy clues. With recent inflation concerns, Fed officials are expected to provide more guidance on their next moves. Any hawkish or dovish tone in upcoming speeches could shake up the dollar. Eurozone inflation data. The euro is under pressure, and upcoming CPI readings will either confirm inflation is easing or add more fuel to rate hike speculations. A higher-than-expected print could push euro to US dollar higher. Bank of Japan's next move. If US dollar to Japanese yen pushes past 150.00, we could see action from Japanese authorities. Traders should be cautious of potential intervention. Crude oil prices and their Forex impact. Oil prices have been climbing, and this directly affects currencies tied to commodities like CAD and AUD. Keep an eye on WTI crude levels and OPEC chatter. Now, let's break down some key technical levels for major pairs heading into the next session. Euro to US dollar, resistance at 1.0900, support at 1.0820. A break above 1.0900 could trigger bullish momentum, while a drop below 1.0820 might open the door for further downside. Pound sterling to US dollar, currently near 1.2750 support. If buyers hold the line, we could see a move back toward 1.2800. US dollar to Japanese yen, 150.00 is the psychological barrier. If it's broken, expect volatility and possible BOJ intervention. Australian dollar to US dollar, hovering near 0.6580. If it fails to hold, we could see 0.6550 tested soon. So, how should traders approach the next session? Here's my take. Scalpers, look for breakout trades around key technical levels, especially on euro to US dollar and US dollar to Japanese yen. Swing traders, the dollar's strength could continue, so consider USD longs unless we get dovish Fed commentary. Long-term investors, watch central bank signals. If the Fed hints at a slower approach to cuts, it could mean sustained dollar strength in the medium term. That's a wrap for today's Forex Market Insights. As always, stay disciplined, manage risk wisely, and be prepared for volatility. Don't forget to subscribe to the podcast for daily market updates. Happy trading, and I'll catch you on the next episode.